promise I will try to make it a bit more fun. We heard this morning about private credit, thanks to David. We just heard a lot about AI and data. Let me try to connect these two topics together, right? But before I do that, I make a small detour. Are there many people who like to travel? Are there many people who like to fly? So two of us, okay, cool. I'm myself coming from the aviation family. My father used to service fighter jets in the army, and then later in the civilian sector. So it's a little bit in the family DNA. So I'm fascinated by the aviation, but I didn't take my father's footstep. I went after school right into finance, but I'm still like trying to learn and trying to make some analogies, right? So interesting fact. The new Airbus A380, it collects at any point of time during the flight 1,200 data points, parameters, continuously. All transatlantic flights are generating daily, every day, 44 zettabytes of data. Amazing amount, right? The previous generation Boeing was collecting only 100 data points, so it's a one order of magnitude, actually more. So you see that around us is loads of data, and the amount of data is like increasing, and that's why we need AI to process it, because like people, it's even difficult to comprehend, like 1,200 data points, you cannot even remember, right, all of them. So what our colleagues in the public finance have been doing like quite for a while, they've been building these algorithmic trading bots. They were exploiting arbitrage opportunities, executing very profitable strategies in a millisecond, right? There's the first machine learning and AI at scale we have seen in finance. But why only like limited to the public markets? I believe that this could be nowadays used in the private markets as well to generate profitable opportunities. As I give you just the example, like aerospace industry is generating so much data, so do our activities every day. And we don't need to go very far. Let's take just payments. Here in Southeast Asia, we have very popular QR payments, remittance payments. Almost every second, every minute, somebody is paying. Maybe your mate in Singapore is paying a remittance to Philippines. Maybe it's happening something that the Indian farmer is buying insurance. There was a more than an average rainfall and a very specific space in Java. Somebody just took a loan. Somebody just made a payment for a loan. So those all data points actually could be collected and then can be turned into investment opportunities as well if it's done right. For example, there are 4 categories which I would like to make as an example, which can be unlocked in a very different way than in a traditional finance process, be it trade finance receivables, where if you can actually monitor the shipments of the goods going in real time, you can get between 8 to 18% yearly return on this investment. Settlement finance, where you are financing the gap between when the transaction actually happens, the customer does the transaction, and the intermediary bank settles the transaction in the bank account in the target country, you can make 6 to 8% yearly. On the consumer and micro SME loans, you can make between 12 to 15% return. Non-performing loans and being able to value properly based on this vast amount of data, you can make between 15 and 20%. But not everything is like so easy flying, like smooth flying in here. So a lot of these data are locked in private databases, so they are not publicly available on the internet, so ChatGPT cannot query them. So you need to get the data. Those data are so usually not structured. They are prone to a lot of errors. Those data might be in the format of the picture, audio, right? So it's not something you can easily load to your spreadsheets, right? So you need a powerful software to be able to process them, and somebody actually who understands those data very well. And fortunately, we have done, at Kilde, we have done part of the work like for yourself. We have created an investment product from the consumer and micro SME loans from those portfolios, which are very large here in the Southeast Asia. We have just heard this morning that the credit gap is about 500 billion just in the Southeast Asia. And because it's a private credit, and connecting back to David's presentation, private credit has this very welcome property that protects investors from volatility. Protect us from the market volatility of any public instrument, even the safest one. And because the private credit is a bit of a still insider game, it yields better returns than those investments who are available to everybody. So it's still beating inflation, and it's still beating return and generating alpha. So what we did in the firm, so we made it easy primarily for institutions, but also for individuals to invest into private debt with the assurance that they are getting the maximum returns, and the safety of their money is guaranteed. And how we did it, so we accumulated loads of data from consumer lending, SME lending companies, basically non-banking financial institutions around the world. We got the data about repayments, we got the data about the loans they issued, about the performance, who was late, when was late, why was late, how different products perform, how the consumer loan in Indonesia performs against consumer loan in the Philippines, and so on. So we have, on average, we have sitting about a database more than 20 million data points. And we have processed it and created an investment product where nowadays we have about 50,000 of these small $100, $300 loans in the collateral. And this collateral generates 1.6 times more cash flow than our investors' money invested into this. And this is the simple investment thesis, which you can only do with the data, actually understanding the granular data, because we know when every single of these individual loans going to be repaid, which are likely going to be defaulting or not paying on time. So we are able with a 95% accuracy to say the next 6 months how much cash will be going from this collateral. And this is a very powerful thing for any investor, because suddenly from a pile of data and very on the surface non-liquid asset class, you have something which is a liquid, short tenure, and with a very predictable cash flow. And that's the investment instrument we have created from these, where you can go invest into very highly diversified asset pools, different companies, different countries. We made 8 deals in the past 2 years. It's a short tenure, typically from 3 to 36 months, and you get coupons monthly. So it gives them monthly returns. So our performance year to date is now 11.9%, like net return to the investors. We never lost any investors' money, so we have exactly every year 0.0% delinquency to the investors. Investors are getting monthly coupons, and the last point is very powerful. If you want to get your money back, because the underlying asset is a short term, you can get them back in 3 months, fully at the face value and accrued interest, no penalties taken, which very few asset classes can produce something like this. Last year was a very turbulent in the financial markets. So you can see that the benchmark, the closest benchmark to what we are doing, the iShares JP Morgan Emerging Market High Yield Bond, has been minus 12%. Actually, now year to date is about minus 5%. And we've been 11.6%. We have been hitting the returns every month, like a Swiss clock, and keeping the cash coverage in 160% and delinquency at 0. We work mostly with funds, so with the private credit funds, with the fund managers, but we are also open to mass affluent investors, accredited investors. And again, I believe that this is one of the few instruments where those individual investors can go directly without expensive intermediaries, which are withholding the large part of the commission and large parts of the returns. And we have an investment platform which is available 24/7. People can onboard with SyncPass, but one thing which I wanted to point out here, that external asset managers and the wealth managers, they can onboard their own clients and they can manage their own clients' money at the platform 24/7, right? And again, taking any management fee, they usually taking from the client's money. And it was told this morning that a lot of investment researchers are nowadays recommending to allocate into alternative and fixed income alternative something around 10% of the wealth. I would say this is not like a fixed number. It depends on how much wealth the person has. My experience is the wealthier the family or the wealthier the person, the more they held in some sort of a debt instrument, and then the more they should be holding in some sort of private debt instrument, exactly for the reason of the protection against the volatility I mentioned before. Yeah, so few words about us. So our mission is to make it easy for institutions and individuals as well, and wealth managers and EAMs to invest into private debt, into the data-driven private debt opportunities. We have a license from MAS dealing in securities. We also have a branch in the UAE, in the ADGM. And thankfully, we have very good partners in ADGM Hub 71. In the IFC Startup Bootcamp. Algorand Foundation also is one of our partners. And a number of prominent venture capital firms have invested into our firm. And to close this presentation, so you can find us at the booth over there on the right, on your left. We are happy to look for partnership with the borrowers who have some income generating asset which is highly diversified, and we are also open to speak to potential investors. Thank you very much.